Hey all, welcome to ShareTreck. This is a freewheeling discussion. This is going to be a short video, maybe 15 or 16 minutes. And the topic basically is that I feel optimism that we are coming to an end of the Russia-Ukraine conflict. As we have seen in our community poll, most of the people said that Russia-Ukraine conflict is the first risk that can be mitigated. And I'm going to talk to you about the reasons why, because there have been some really encouraging set of news that I got this morning when I was doing my daily update research. So let's get started with that. So the very first bit of information I have is that Russia has defaulted on its bond payments, international bond payments. And as I mentioned in the daily update, if you have not seen the daily update, just please go ahead and have a look at it. I had mentioned that it's the international bond issuing rules that the currency in which the bond is issued is the currency in which the interest has to be paid. So even though technically Russia has got money to pay and meet all its commitments for the bond payment, and the amount is not that great compared to the GDP of Russia, or even for that matter, any international scale of transaction, still Russia has not been able to pay it in US dollars because of the embargo that we have, because of the sanctions against Russia. They can't pay in euro, they can't pay in US dollars, and they offer to pay in rubles, but the International Bondholders Association has decided that it's a breach of contract, and they may most probably go to the international court to file an appeal and try to recover the money from the frozen assets of Russia, which are denominated in US dollars and euros, and recover their share. Now, Russia tried valiantly to avoid becoming a defaulter, because if they default, then future borrowings become expensive, and also selling their bonds will become difficult going forward in future. Unfortunately, that has been thwarted by the West. Therefore, that's one pressure point on Russia to end the Ukraine war, because they would be having a limit of how much funds they can raise from the international market. The second pressure point is that the gas machinery that is used, the mining machinery that is used in Russia to extract oil and gas, is maintained by Siemens of Germany, and because of the sanctions, Germany-based companies cannot go and help Russia, and as a result of which Russia is cutting the gas supplies to Europe. So this is going to lead to a reduction in the amount of cash that Russia can generate from sales of oil, if it's going to generate less oil and gas going forward due to machine problems. So this is the second pressure point. The third pressure point for Russia is in Kaliningrad, which is embedded between European countries, and those countries like Lithuania are trying to implement the EU sanction, and therefore movement of goods and services and material between Kaliningrad and Russia is it has been halted, and that's causing a big deal of pressure in Russia, because if the business people and others in Kaliningrad cannot get supplies from Russia and cannot have the trade deal, then they would take the easier way out after a particular point of time and decide to join with the Europeans or go for self-determination or something like that. So that's another pressure point on Russia. The new pressure points that have come up today is that G7 is contemplating putting a price cap on Russian oil, and such a price cap, I suspect, would be at a lower end. And this has come about because Russia has been selling discounted oil to Asian countries, and Asian countries find it easier to and more affordable to buy the cheaper Russian gas. And this has been going on, and Russia tries to keep the price just at a level where it is still attractive for the Asian countries to buy from them, and at the same time it's not competing with the OPEC too much. But if the G7 countries put a lower price cap, then they will turn the tables. At present, they can't put sanctions on all the Asian countries which are buying Russian oil, and the Asian countries find it much more convenient to buy cheaper oil in the light of higher oil prices. So the moment G7 puts a lower price cap on Russian oil, what's going to happen is it's going to turn the tables in favor of the G7 countries, and the Asian countries would like to buy the cheaper oil from Russia at a much lower price than what Russia is selling right now. And I suspect that the G7 countries would like to place the cap at a much lower level. This in turn is going to push the OPEC countries to reduce their oil prices in order to retain market share. So overall, I think there'll be a downward push in oil prices, which is good for rest of the economy, not for the environment, but for the rest of the economy. But this is again another nail that's going to push Russia towards resolving the Russia-Ukraine conflict, because from a financial point of view, Russia is being pushed very, very extremely, and that's going to mean that they have less money to spend in the Russian war. Another development is that Russia has already made a lot of inroads into Ukraine, and at this point of time, the risk-reward ratio for Russia is more skewed in terms of declaring an end to hostilities and then getting back on track and calling it a victory, rather than pushing further ahead, because there is diminishing returns going ahead the international tide of opinion and sanction measures. So that said, I think I'm very optimistic that we are coming closer to the end of the Russian war, which also means that stagflation risks are diminishing, and if something similar can be done for wheat, then we can eliminate the stagflation pressures. Overall, that's the reason why the markets, global markets, are all buoyant today. And if G7 goes through with its plan for capping Russian oil prices, that will be one step in the right direction for the global business community and for also the stock markets, and we can be more risk on going forward, and that will help our genomic companies a little bit, and genomic companies are facing a lot of pressures. And one of our subscribers pointed out that genomic companies seem to be under more pressure than crypto, and my point is that genomic companies have got IP in place which have progressed, and cryptocurrencies have got use cases which have progressed to a certain extent, and both of them need to be realized in the full extent in order to be viable. So yeah, definitely genomic companies have been unfairly beaten up, and it's high time for us to get some respite, because a few genomic companies have already been forced to close shop. So things are getting really dire for the genomic companies at the edges. It's not so for CRISPR Therapeutics, because it has got money in its balance sheet and a few other CRISPR companies. But overall, it's time for the tide to change. We are still not at the bottom of the market, mainly because the Fed has got to increase the interest rates by 75 basis points going forward. They've already announced. So unless we see lower oil prices reflected in less inflation in the next reading, we are going to have further downfall in the market, and we won't have found our bottom. So we all wait for the next consumer price index to see where we go. With that, I would like to bring this video to an end. If you like this video, please press a like out there. If you are not yet a subscriber, please subscribe and help us grow this community. Thanks and have a great day. Bye for now.